Hey guys, welcome to another episode of Market Trading. I'm your host, Vays. The audio is going to be bad for a minute because I actually forgot to add my microphones.
I need to zoom in my camera a smidge. Today, rained. Did I lose signal? Rained like crazy last night. Really. All right, internet should be good. All right, we're back. We are back. At least I hope I'm back. Should be back. Yeah, I'm back. Okay. Let's go to the charts. Audio should be good. Video should be good. I see your live chat already. A couple of good questions have come in. Did you see they got Gonzalo Lira? Yes, I did. Very unfortunate. Look, Gonzalo is a bit of a drama queen. He should have never stayed in Ukraine. Should have got out way earlier. Should have got out after the first time they arrested him. Should have got out before they arrested him the first time. It's unfortunate. I actually have a lot of Russian speakers watching me. And here's the thing, what people don't understand is every Ukrainian speaks Russian. So I don't know how many of the people that watch me are Ukrainian versus are Russian. And just because you are Ukrainian doesn't mean that you're pro this pro-Ukrainian regime. Lots of Ukrainians were pro-Russia. That's why a Ukrainian president, a Russian-leaning president, has always been elected in Ukraine prior to the revolution in 2014, which was completely driven, not completely. Let me rephrase that. It was, I would say, it was 15 to 20% naturally driven by very anti-Russian, pro-Ukrainian, I guess, groups. But that revolution would have never happened, would have never succeeded, would have never gone to the way it was had it not been for American assistance. So, well, I'm not going to say that the United States was 100% responsible for the Ukrainian revolution in 2014. They were at least half responsible, at least half. Could have been 40%, could have been 60%. But the point is, without American assistance, it would have never succeeded. That's the main goal I'm trying to say. And once that revolution succeeded, a democratically elected president, as corrupt as he was kicked out. After that, America put in their puppets, and Zelensky is the worst of the bunch, in my view. The sooner that guy is replaced, the sooner peace will actually come to that region. So let's just say I'm not a Zelensky fan. And Gonzalo Lira should have been deported. The guys on the Duran are 100% correct. I'm not on the side of, what's his name, Scott Ritter, who thinks that Gonzalo was a SBU asset, like working for the Ukrainian government. I don't buy that at all. I think that makes absolutely no sense whatsoever. So since they didn't kill him the first time, I don't think they're going to kill him the second time. But unless, some American diplomat actually gives a fuck and tells the Ukrainians to ship Gonzalo to US or Chile or basically any other country in the world, he's not going to have a fun time. I haven't looked at the Wells Fargo report. I have the American Bank of America report, but I haven't read that one either. But I haven't even seen the Wells Fargo report. Bank report on currency, euro very bullish for 2024. The people at Wells Fargo are idiots. If they are bullish on the euro for 2024, they should all be fired. No one in their right mind should be bullish on the euro for any reason whatsoever. It is insane. I will take the Russian ruble over the euro for 2024. Actually, I should pull up a chart and have like ruble versus the euro. I think that would be an interesting chart to keep an eye on. All right, there were other good questions, which we're going to get to. Okay, let's go to the charts. All right, so this is a very interesting chart. This is how I originally made this chart using monthly bars. And right now, we are perfectly aligned with the bar I anticipated for August. Remember, this was one of the two paths. I put this together back in January when we broke out over this trend line. Now, the trend line is drawn on a weekly scale, more like this. And we are exactly where I expected us to be right now, since we did not follow the shorter term bullish path. And this was the time to know the April breakout. Had the April breakout kept moving, I would have expected us to top in May, somewhere in the $60,000 area. But when that didn't happen, we are now perfectly following the purple path. And in the purple path, we are exactly where we're supposed to be. Now, next month, I am anticipating, so this is the month of September. And for the month of September, I am anticipating a big rally in September. We will see what the stock market does. But in September, I'm expecting a big rally, but I don't expect it to go above $40,000. And then I'm expecting a pullback. So this is my view. This month, we're going to kind of stay in this area. And then next month, we're going to have a nice $10,000 upswing. That's my projection. We will see where it goes from here. Weekly chart, the week is coming to an end. No, it's not like, guys, currencies don't have lows and currencies don't have highs. That's not how currencies work. Currencies have global confidence in the government of said currency, and they have, I guess, global laughter at the competency of the government of those currencies. Europe is going into the winter. They got away with last winter by pre-buying a bunch of Russian gas. And also last winter was not very cold, contrary to the global warming crazies. I'm expecting this winter to be pretty damn cold because last winter was not. And Europe has a huge energy problem, especially now that France got kicked out of Niger and they're looking to start a global war over it. So they're going to have a problem running their nuclear reactors as well. France is the last country in Europe that refuses to shut down their nuclear reactors. Europe is going to have a huge problem this one. Huge problem. And look at what the riots, what's happening in France. Europe is in serious political trouble. And when your country has political trouble, it crashes your currency. The euro does not have a floor. The floor for the euro is a breakup of the euro into its components. So you can't do long-term TA on currencies, really. There sort of. There's no support. There's no resistance. It's kind of short-term stuff. Now, I am bullish on the US dollar versus the euro, but the one currency that I'm most bullish on is obviously Bitcoin, because I think everything is going to devalue against Bitcoin and gold. I'm also bullish on gold. I'm very consistent with this. So yeah, we're going to talk about currencies. It's a really good discussion. By the way, our Twitter Spaces do go to YouTube. Let me check the last. Here's the Financial Summit YouTube channel. We dive deep into the stuff on the Spaces. The Spaces from Wednesday has not been published yet, but check out these two. They're really, really good. It goes to YouTube now, so you guys can watch it on 2x. Okay, let's get back to the weekly chart. The weekly chart continues to be bearish at this point. Since we have a red star candle on a weekly scale, I would love for us to keep going slower and slower and slower, and eventually make the low at the 50-week moving average. Is that the 50-week? No, I'm sorry, the 200-week moving average on an MRI buy, but that's not going to happen until September. So we'll see what happens there. We lowered our allocation to 50%. We are now lower than where that lowering took place. Those that are similarly adjusting their longer term position portfolios could have exited into 50% at a higher price right after I mentioned that that's where I'm doing it. And right now, I am very confident that this move was the right thing to do. I think we are very likely to go a bit lower. And now we have the long term actually declining. See, the long term was never declining the last time we allocated down even to 25%, but we were below the long term. We're still above the long term. So what this says is, if the price of Bitcoin goes below the long-term moving average and the long-term moving average is declining, it actually warrants a 100% cash allocation, because shit can hit the fan. Now, I will be very reluctant doing that, but I will have to do it. Civic rights. Isn't September normally a terrible month for markets, and it gets better after that? Yes, that is true for the stock market, but that doesn't have to be true for Bitcoin. Bitcoin has struggled a lot more than the stock market has. And Bitcoin has its own cycle, especially as the halving draws near. Like, let's see when the halving is. Bitcoin halving. Clock. I forgot the clock. So this was the website I kind of liked. And remember, I'm still anticipating the halving to take place in March. I think more hash rate is going to come online, but right now it is still set for April, mid to late April. So let's see how that goes. But we are now down to 260 days. Let's take the average of these two. 260 days to the halving. September, another 30 days goes by. People are going to start to get bullish. They're going to start to pre-run the halving a little bit earlier. Financial Summit coming to the UAE, November 5 to 10, an incredible event for traders, hedge funds, family offices, money managers, VCs, anyone that wants to talk about making money in the markets for 5 days. Come and join us in the UAE. Check out our YouTube channel as well. We're really trying to get to 1,000 subscribers. We need 1,000 subscribers and a bunch of hours watched so we can remove ads from this channel. We don't plan to profit from the ads on this channel, but we want to remove them. So please subscribe. We are up to 863 subscribers. We are now posting the spaces on YouTube, and eventually we will start posting trading analysis on here as well. Yeah, and room rates for Unconfiscatable are rising. Come join us at Unconfiscatable. Hell, the tickets are actually rising. So if you go to register, Guys, we have 3 tickets left for the carnivory dinner. The carnivory dinner is a speaker's dinner. The speaker's dinner cannot accommodate 400 people. The speaker's dinner only accommodates somewhere between 100 and 125 people, and about 40 of them are going to be speakers. So this is your chance to have a dinner with the speakers, and it's limited. We're only going to sell like 75 tickets to this, and there are 3 left at $300, and then the price goes up. In prior years, the ticket to the dinner was actually more expensive than the ticket to the conference. The last 5 tickets to the dinner will probably be $1,000, and the conference is unlikely to get to $1,000, but you never know. Depends how fast tickets are selling. So we still have 50 tickets to go at $650, and after that, the price of the ticket goes up to $750. The sooner you buy it, the cheaper it is. We don't raise it based on time; we raise it based on demand. So definitely, if you're planning on going to the speaker dinner, you want to get on that soon. VIP ticket does get you into the speaker dinner, of course. So, not into the poker though. Speaking of poker, so here's why the stream was late today. We are playing a poker game. There's a 0.03 Bitcoin entry fee right there this year. And we're also going to be hosting poker at BitBlock Boom. Those that are coming to BitBlock Boom, BitBlock Boom. I actually just bought a poker table, getting it shipped over to Texas. And we're going to have some fun time playing poker almost every night. Almost every night we're going to have poker, not the 27th. I think that's Sunday, right? I have to look at the schedule. So I'm going to host a poker table. Will only fit 10 people. There's 600 people at the event. So you kind of have to be friend-ish with Tone to get in the poker game. And there'll be a cash game as people, lose their money. They would, they would give up their seat, and then there'll be the next person on the wait list goes and sits down. So we're not playing Tuesday, and we're not playing Wednesday, but we're playing on Thursday. Thursday's game is going to be at the dinner. You need tickets to the dinner to play. So Thursday dinner party right here. But then the following days, we're going to play over probably in like the VIP room or like a speaker lounge and stuff. And what I was making sure was I wasn't going to get arrested in Texas for hosting poker, and I'm not. So these are like laws on private and like personal poker games in every single state. It's a little bit old, but I mean, laws have not gone worse. It's only, I mean, you can double check me on this. I know we did look up Texas and we did look up Nevada, and California is fine too. But I don't think I'll be doing this at Pacific Bitcoin. I'll talk to them. I don't know if they want it or not. It is legal as long as we don't profit from the game. So no rakes, no entry fees. The host can play and win, but they can't take a cut. That's basically the deal. So if you look at the laws for Texas, right here, social games are legal. Now, Florida is really, really interesting. I think the simplest one is Nevada. So that's kind of your standard, which is why it's great to play in Nevada. Where is it? Where's Nevada? There it is. See Nevada right there. Does not include games played with cards in private homes or residence in which no person makes money for operating the game, except as a player. All right, mic check, mic check, mic check. Something's wrong. Okay, well, it was working, but is it back now? Yeah, okay, we're back. All right, we're back. All right, so anyway, to make a long story short, if your state allows gambling and it allows social gambling, that's Montana. I don't know about Montana. So Nevada makes it very clear. You can host a poker game as long as the host of the poker game is not profiting directly from the players in the poker game. So no entry fees and no rakes. California has the same law right here. California, right? Games played with cards in private home residence in which no person makes money for operating the game except as a player. Okay, so this is what Molly Bloom was doing basically. New York is a little bit trickier. Florida is funny. Florida needs to update some laws. So here's the funny one in Florida. It's allowed, explicitly permitted to host a private game for money. Here's the issue. In which the winning of any player in a single round or hand or a game do not exceed $10. So we can explicitly allow to gamble in Florida in your house as long as the winning pot is under $10. It's hilarious. Talk about laws that need to be updated. Hence, we cannot host a official Bitcoin game down in Florida at a Florida conference. And which is why unconfiscatable cannot happen in Florida, because we would not be able to host the poker tournament. Yeah, California and Texas agree on something. That's true. So yeah, so at BitBlock Boom, I have a poker table coming in, and we're gonna have some fun. So come and join us at BitBlock Boom. Okay, real quick, daily chart. Yeah, we're sticking with our 50% allocation for now. Daily chart, I would love to see an MRI buy show up at around 28.5 sometime next week. That would be absolutely perfect. That's what I'm waiting for. I am now bearish on the price of Bitcoin, waiting for the next support level down or around 28.5. However, when we get to 28.5, we have a problem. So I made it very clear in the last stream that this whole thing smells very bearish to me. The problem happens at 28.5, because at 28.5, we would have a double bottom. And at a double bottom, what does Tone expect? Well, Tone expects a double bottom to maybe rally the price for a smidge, but ultimately going lower and establishing a cleaner area of support. So very likely, our ultimate low is going to be closer to 28,000 than 28.5. GBTC, I already mentioned last time. GBTC, pledge your GBTC shares so that David Bailey takes over the management of GBTC over Barry Silbert. I am strongly on board with this effort. I still have a few thousand of GBTC shares, but but they don't just need thousands. They actually need tens of thousands. Just to be sure, they can always use a few more pledges. They already got the big institutions, I believe, on board, and that's what really, really matters. But if you want to show support against the GBTC management, pledge your GBTC shares so they are managed by someone that actually gives a shit about Bitcoin, unlike Barry Silbert, who never did, apparently. Guys, we had an awesome stream for Bitcoin Law Review. Might do another one of these soon. Oh, oil. Oil's great. So we're getting more and more news from the oil, from in the oil department. Here is someone that sent me something interesting. So right here in this story on oil, so I already showed you the news article from the other day where the Biden administration is saying they're not planning to buy back any oil, contrary to the earlier promises. I mean, I expect nothing less from the Biden administration. It is the most conniving, most lying through their teeth administration I have ever witnessed in my entire life. I mean, the Clintons were pretty bad, the Bushes were pretty bad, they were all bad. But the Biden administration takes it to a whole other level. Now, this article basically says that the Strategic Petroleum Reserve wasn't even used within the United States. It was used to sell oil to China, which is insane, absolutely insane. Energy Secretary Jennifer something was highly criticized Friday after a Fox News digital report showed that she spoke twice with top Chinese government officials before the White House announced plans to tap energy oil stocks. I have no idea who this is. Why do people like randomly call me? So all right. Anyway, according to a bunch of internal documents, this is bad. So the US government is the current administration. So the current administration is really weird. In my opinion, I think China has a lot of blackmail evidence against the Biden administration. So they are anti-China and still being blackmailed by China at the same time. So they're doing all this stuff, uh, to start a war with China. The same way they're doing it with Russia, because they have lots of interests in Ukraine and they just want to bury those interests underground under a war. The current Biden administration, but there were rumors how Biden was bought by the Chinese even before the election. So I think they're being blackmailed by the Chinese, while at the same time they're trying to create a war with the Chinese, so the blackmail won't matter. The same exact thing that's happening in Ukraine. Anyway, so now we know where the oil from the Strategic Petroleum Reserve is going. It's going to China. Now, the only excuse I can give the government is, well, if we don't sell oil to China, then they're going to buy oil from our enemies and they're going to enrich our enemies. This is also the debate on, like, hey, if we don't sell weapons to our enemies, then our enemies are going to buy weapons from other enemies, and then they're just going to enrich other enemies, right? So if we don't sell a bunch of weapons to, I don't know, Iran, for example, then Russia will sell weapons to Iran, and then Iran will still have the weapons. Russia will get richer, and the U.S. is holding the bag. It's that kind of an argument. So the United States has decided to sell the Strategic Petroleum Reserve to China, so that China doesn't buy it from Russia, and somehow they think this is hurting Russia, when in reality it is only hurting the United States. We talked about the US budget as well. Man, the US budget looks rough. So this is, wait, what month is this? Oh, this is June 1 year ago. So this is 1 year. So this is me comparing 1 year ago versus now. So this is last June versus this June. We talked about these numbers. The numbers look scary. This is freaking scary. 70 billion in net interest is very scary. I can't wait to see what it is next month. That's going to be mind blowing. Absolutely mind blowing. I'm still waiting for this page to update. They still haven't given us like the June numbers. It's really, really weird. I don't know how late they publish them here, but like June's still not here. Really crazy. The US government is now in a bigger deficit hole than it was all of last year. We only have 3 months to go. We don't have 6 months to go. It's only 3 months to go. Fiscal year ends at the end of September. So a government fiscal year is October 1st until September 30th. And the biggest problem for the government is the revenue. This revenue right here, your personal income tax is down 20%. 20% less income tax. So at this time last year, we're comparing apples to apples now. This is June 30th of this year versus June 30th of last year. So at this time last year, on this very same day, the government had a lot more money. See, individual income tax was over $2 trillion by this time last year. This year, it's only 1.7. That is 1.7, and this is 2.1. So that is $400 billion is missing. Yeah, we talked about the bond issuance. Joe Colasari, welcome. Joe Colasari will hopefully be joining us in Twitter Spaces tomorrow. If you're bored, Joe, I'll send you this link. Come hang out on YouTube. I'll send it to you anyway. Hold on. I don't know if you want to get on camera, but you'll be welcome. I'll get it just in case. I DM'd you on Telegram in case you want to hop on. So the rest of the numbers are identical. Like social, this is Social Security is 1.1, corporate income tax 300. So if you go here, see Social Security 1.2, a little bit extra, and corporate income tax 300. So everything's in line. Everything's in line except individual taxes. People are asking, what's the lowest I see us going to? Well, this was my projection. The lowest I see us going to is about 27.5. Right now on this current swing, let me see. On this current 28, I really don't see us going below 28. I think 28 is as low as we go, 27.5, 28. I don't see us going lower than that. Fabio, I agree. But at the same time, the Fed is trying to fight inflation with higher interest rates. Something's going to have to give eventually. I think there were other good questions at the very beginning of the live chat. Assuming we break 28.5, where do you think the most likely find support? 28 or 27.5? Why be bearish on? Oh yeah, the euro thing. Yeah, we can go talk some currency. All right, let me see what else I have over here that's open. If I lived in the EU, I would not have not a single extra euro in the bank that I needed, right? So I would convert all excess euros. That's what I would do to either gold or Bitcoin or American stock market. Like I can see Europe completely falling apart. Thanks, Bitcoin shooter. Saw your comment about politics. We'll go look at currencies in a bit. Currencies are very important. I am bullish on gold. I think gold is going to a new high, probably 3,000-ish over the cycle or more. S&P 500, I remain long-term bullish on the S&P 500, but this was a bad week in the S&P, and I would love for the S&P to pull back before starting another leg higher. By the way, speaking of oil, what I forgot to look at is the daily chart of oil. You can see how oil topped on an MRI on a daily scale. It could not break the MRI resistance line. It had a 1 to 4 candle correction. It had a big red candle here, and then it made a low on Thursday, but then it rallied on Thursday, and now it's about to break the MRI resistance line, and then it's going to break a very crucial line of $84 a barrel. Now, did the U.S. government sell any oil on this day? The question is they might have, and I can't wait to see the petroleum reserve numbers coming out on Wednesday, because if the U.S. government sold over 500 barrels of oil, let me open the oil reserve. If the U.S. government sold 500 million barrels of oil, like more than this number here, more than this 400, and the price of oil still rose as much as it did that last week, that is going to be disastrous. That is a disaster in the making. If the U.S. government actually sold oil this week and they still couldn't push the price of oil down, that's a huge disaster. And very likely oil is heading to over $100 a barrel. And then all shit's going to hit the fan in the United States and especially Europe. This damages Europe so badly. It's crazy. Oh yeah, I'll look at the 10-year treasury in a bit. And then the natural gas. Europe is still lucky natural gas prices aren't rising. If the price of natural gas rallies to $4, Europe is just screwed this winter, completely screwed. Who do you want to be Trump's VP? RFK. RFK and Trump, or that Indian guy. I don't know. I mean, it's not going to happen, but he's good too. But nobody else. Like, guys, I'm not on train DeSantis. I'm not on train DeSantis. I'm not. I liked him for governor, but I'm not on train DeSantis for president. And he's never going to be Trump's VP. His ego's too big for that. RFK is the best VP for Trump. The other way around is not true. Trump is not the best. Trump is not a VP for the same reason DeSantis is not a VP. Their personalities are not VP style. Now, DeSantis would be an okay president, but he's on the second tier. DeSantis is on the second tier. Now, who's that business guy? Vivek something? Yeah, Vivek. This guy. I'll take him. I like his policies. No one knows who he is. No one can pronounce his name. Vivek Ramaswamy. I haven't actually heard him in a debate or anything like that. I haven't heard his videos. I just know his policies, and his policies are accurate. So if he gets, more stage time, people might like him. He'll make a good VP. He would never be a VP. I mean, are you talking about Vivek? Like, I don't know. I've never heard him speak. I only read about his policy. RFK would be a good VP. Trump, RFK, those are my candidates. After them, like, they're not running, right? So Rand Paul is great. Senator Ron Johnson's great. Senator Luna's great. Candace Owens is great, but she's not going to run. I'll take Candace for VP. I don't have a problem with Candace. Nikki Haley's terrible. Pence is even worse. Tulsi's okay. Tulsi Gabbard's okay. No, you have to be 35 to be president. All right, where were we? I need to look at treasuries. Joe Colasari, I'll vote for you for VP. Yeah, so US stocks have been down every day last week, almost every day. So let's see. Let's see what happens when we break the MRI support line. I think the S&P will pull back some more. Let's see how far. Ideally, I would like to see it pull back all the way down. I would like to see it pull back all the way down, get everyone scared that a recession's coming, and then rally off of 4,300. That's what I would like to see. I would like to see a rally of 4,300 on the stocks. We're getting to currencies. Oh, I want to see the percentages for unemployment numbers came out, and it looks like the Fed is likely not to alter the interest rate come next term. I think I agree with that. I think the Fed is not going to touch the interest rate next meeting, but they'll mess with it in November. And they might leave it alone in December. So this is the US dollar. The US dollar is coming up on an MRI buy, but it's not going to be an MRI buy because unless we crash all the way down. So I am still bullish on the US dollar versus the euro. Now I want to glance at the Russian ruble because people keep talking about it. Oh boy. So the Russian ruble is devaluing right now. This is not actually bad for Russia. It's not terrible for Russia. This is a rough devaluation this week. I really expected the Russian ruble to appreciate with the MRI top, but currencies is the hardest thing to predict with the MRI because currencies keep going and going and going. Fed done hiking? I don't think so. I don't believe they have. So again, a little surprising. But it's Russian currency is devaluing slowly. It's not terrible for Russia. Makes their it makes their exports more interesting. But I think, again, remember what I said in the beginning of this stream. Currencies are a product of confidence in your country. And the Ukrainian offensive for the last 2 months has actually been doing fairly well. They haven't been able to capture any of the land. They're still dying. The Ukrainians are still getting killed at the same pace as they did before. But the difference, the big difference in the Ukrainian counteroffensive is that they are killing a large number of Russians. They're killing a larger number of Russians than they have in the past. And they've stopped Russia from advancing. All right, what people need to understand, and here's the most complicated part in explaining the Ukrainian situation. And this is what people don't understand because people don't think in multiple dimensions. This gray area on the map, and remember, this is a pro-Ukraine map. You see all these gray areas? Can I turn off the, yeah. So all of these gray areas right here. This is areas that at one point were occupied by Russia. And Ukraine and Russia retreated from this area. Now, what you need to understand is what every person needs to understand is why did the Russians leave the gray area? Did they leave it by choice? Or did they leave it because they leave that area because they got their asses kicked by the Ukrainians? Now, nothing is absolute, right? Everything is a sliding scale. But what factor on a scale of 0 to 100 did this retreat from the gray areas was Russia's voluntary choice versus Ukrainians pushed them out? And I would say it is 80 to 90% Russian choice to leave that area, and 10 to 20% that Ukraine actually did something on the battlefield that forced Russia to retreat that area. So, but the narrative in the news is that Ukrainians kicked Russia's ass and they kicked them out of this area. In fact, this gray area used to be bigger. Russians retreated even further to the east and the south. But since that retreat, Russia has actually moved and captured more land. But the narrative in the news is that Ukrainians are still kicking the Russians' ass and pushing them further away. This is the Western propaganda. And that is helping to drive confidence against Russia. And that, I believe, is what's causing, the drop in the Russian ruble, is because people around the world are concerned that Russians are not taking over Ukraine fast enough. And when the world is concerned that Russia is not taking over Ukraine fast enough, it reflects in the Russian currency. So the last 2 months was the main Ukrainian counteroffensive, which started in June. You can see that the Russian currency started to appreciate going into June. But since this counteroffensive started 2 months ago, you can see how much the Russian currency has devalued. And this is one of those issues that Russia will now have to deal with, because Russia is starting to look weak on the global stage, that Ukraine is able to do what they're doing. Also, they're starting to attack, trade ships in the Black Sea, which is going to hurt Russia's, exports and the shipping routes of grain down into Africa. So Ukraine is creating a big problem for Russia. And so the question is, why did Russia retreat? Well, they retreated because they knew that this land was very difficult to defend. And I do need to get to the rates. I don't know how long Joe Calsari is going to stick around. Oh man, like it's really hard to summarize all of this. So when you have an army on the defensive, it's a lot easier to defend a position than to attack a position. And an offensive unit will lose significantly more men than a defensive unit if the defensive unit knows what they're doing. And the odds could be like 4-1, 5-1, if the defensive unit is properly aligned. Now, when Russia was on the offensive, Ukraine was not in great position. So they were able to hold their own. But then Russia would attack, and then they would retreat. And when they retreat, they would get into defensive position. And the Ukrainians think that Russians are on the run, and they would attack, and now Russians are in the defensive. And that's why tens of thousands of lives were lost in Bakhmut by the Ukrainians, because Russians were on the defensive. So Russia is attacking and defending at the same time. They take a bunch of ground, then they retreat, and they get into defensive positions, and they kill a lot of Ukrainians. But the current Ukrainian offensive is actually slowly evening out the kill ratios. And Russia is scared to get on the offensive because then they're going to lose even more men. See, for Russia, territory is not as important as killing the max number of Ukrainians. But for the West, territory is super important. So Russia is currently on defense, trying to kill as many Ukrainian military as possible. But the longer they delay an offensive that takes more regions of Ukrainian land, their currency is, people are concerned. But the moment Russia takes over Odessa, I think their currency is going to go up a lot. However, if Russia takes over Odessa too early and they're not capable of defending this land, then the same thing can happen. This Odessa could be Russian territory, and then suddenly it becomes gray territory, and then it looks even worse on the global stage where people think that Russia is incompetent. Why would you take Odessa if you're not able to hold it? So the Russians are holding out as long as they can, trying to kill as many Ukrainian military as they can in a defensive position before going on the offensive. And Russia doesn't want the next offensive to then give up, surrender territory again and go back to defense. The next Russian offensive for Russia needs to be the final offensive so that they know. So if there's any white area or gray area that becomes red again, doesn't go back to being gray. And this is what Russians are waiting for. And I mean, if there was no news around the world, then Russia can wait another year, kill as many Ukrainians as they can in a defensive posture, and then just take over the rest of the country. But they don't have that kind of time. Russia needs to go on the offensive, and they need to go on the offensive before the winter. So I think sometime by the end of next month, you're going to see a major Russian offensive that may or may not take Kharkov, but it will definitely take Odessa. And the reason they take Odessa is because they don't want Ukrainians to have any access to the Black Sea. Because at that point, if Ukrainians have zero access to the Black Sea, and Russian civilian sea vessels with grain and other agricultural materials get attacked by a drone, it will be 100% NATO doing from either Romania or Bulgaria or Turkey. But I don't think Turkey is responsible for this. I don't think they want to fight with Putin. So Russia is going to have to take over Odessa sooner than later because they want to prove to the world, see, we have Odessa. We have every piece of land that nears the Black Sea, and yet our ships are still being attacked. And therefore, NATO is in this war. And this would actually give Russia the pretense to potentially, bomb the shit out of Romania and Bulgaria if they want to pick a fight with NATO. And then say to NATO, now what? What are you going to do about it? And there's nothing NATO can really do about it. So I think the next step for Russia is they're going to distract Ukraine by attacking probably from Belarus and probably from the Kharkiv area, but that would be a misdirection. So I think they're going to probably attack Kharkiv and attack here, especially if the Polish enter. But this would be all misdirection. I think it will all be misdirection. I think the next part of Ukraine that Russia really needs is Odessa. They want to make sure that the Ukrainians have no access to the Black Sea based on what is happening with the attacks on Crimea and the attacks on trade routes. Okay, now let's go to the bond market. I want to see the ruble versus the euro. I think that's gonna be a very interesting future currency. EUR, RUB. I'm gonna put it here. Let's see if the ruble is gonna appreciate against the euro faster. And of course, the Ukrainian currency is it doesn't trade because the United States maintains the peg. If the United States loses this peg, that's also a disaster for Ukraine. Let's go to the fixed income charts. Joe is all about that bond yield. I don't know if he's still watching. This is we have to look at the long term here. Let's look at the 30-year bond. The yield on the 30-year bond is rising. Government is about to start issuing 30-year bonds, according to Janet Yellen. That is going to be a disaster in its own right. Here is the long-term view of yields. The 30-year yield hit 1%, and we're now at 4%. Government is going to redenominate all of their bonds. So here's a good Google search. U.S. debt maturing schedule. Schedule of federal debt. I don't want daily data though. What's the maturity schedule for federal debt? Beautiful. I need charts. This chart looks ugly. I don't know what it means, but let's see. Interest payments on government debt as a share of federal spending. Oh boy. Oh, this was way underestimated. It came out in 2021. We already know it's way underestimated. Oh, here it is, May 2022 forecast. So here. Oh, this is cool. I like this. I need to make this chart. So here, as of January 2020, the forecast was this line. February 2021, it was this line. And now it's this line. Look at that. And it's even worse today. It's already been a year since then. It's a lot worse now. This is an old article. Rising costs of financing U.S. debt. Oh, this is old. U.S. government finance debt. Okay, reports to Secretary of Treasury. Upcoming auctions. Schedule of outstanding debt. No, that's Verizon. All right, let's see what this is. Oh, that's a recent report. How long is this report? Oh, this could be good. Oh, we should review this. I'm gonna send it to my team. Okay, so U.S. federal government budget deficit and borrowing. U.S. Treasury securities held by the public, U.S. federal budget deficit. So here is all you need to know. Holy shit. Holy mother of Christ. Do you see how huge the deficit is compared to U.S. treasuries held by the public? You see this gap? There is nothing on this chart that has the blue line this far above the red line. This is the product of net interest. This is insane. Completely insane. So here's 2020. Oh, it's a yearly change, right? Yearly change. So here the deficit is going nuts. Wow. U.S. deficit is going nuts. U.S. Treasury securities outstanding, publicly held. This is also monthly change. Okay. See, this is COVID. You have an excuse. You have an excuse. It's probably 09, financial crisis. You have an excuse. You have no excuse here. You have no excuse. There's no reason why the deficit is blowing up, but the deficit is blowing up because of interest. Okay. Janet Yellen is about to issue a shit ton of 30-year treasuries at a 4% interest rate, maybe even 4.5% if nobody wants to buy them. And it's the highest interest rate in 10 years, 20 years, 15 years, 15 years. But now the cumulative debt is so much bigger and a bunch of debt's maturing. So all this debt is being redenominated. This is going to be insane. Let's see. Let's see if they have any other good bits here. U.S. federal debt held by the federal government. Okay, that's good. U.S. Treasury debt. I want to see how much debt's expiring. U.S. Treasury debt held by the public. U.S. Treasury debt. Borrowing of non-financial domestic sectors. No, not what I need. Public debt. Fed's holdings of U.S. Treasuries. And Fed is deleveraging. So the Fed doesn't want to hold this shit either. Nice. Foreign central banks holdings of U.S. Treasuries, not rising. Nice, nice. All central bank holdings of U.S. Treasuries going down. So who the hell is holding? Wow, this thing is off the chart. That's funny. Foreign purchases of U.S. Treasuries. U.S. capital inflow, U.S. Treasuries. Interesting. So who's buying? U.S. federal budget deficit and foreign capital inflows. Foreign money's coming in. From where? Probably Europe. They're just printing it. So what I want to know is, I want to know how much wow off the chart again. Banks, U.S. Treasuries, and agency securities, $1 billion yearly. I'm not sure what that chart is. Oh, this is something. Hold on. Net interest paid by U.S. federal government. Bam. Bam. That's the problem. What are the publicly held treasuries multiplied by various interest rates? Oh, beautiful. Okay. Publicly held this is the chart. This is what I was hoping I'd find in this. And of course, it's the last chart. It's always the last thing. Look, it's the last chart. They put it all the way at the end. Chart figure 25. Holy shit. Shit. Okay. So here's what the government expected. Right there. This is a 1% interest rate. Let's review what the blue line means. Publicly held treasuries multiplied by various interest rates. Okay. So at 1% interest rate, this is how much this is how much debt we'd have. Look how these things start to go up exponentially as the interest rate rises. And this is actual. This is the actual 12 months up, right? So total outstanding debt, net interest paid by U.S. federal government. Okay, so the red line is how much net interest the government's paying. And the blue line is the debt. So Janet Yellen is about to reissue a bunch of debt. So the chart that I'm still looking for is how much of American debt maturing over the next few years that needs to be reissued, because the government never pays the principal. They only redenominate the debt, but now they have to redenominate the debt at a higher interest rate for 30 years. And look at this net interest payment. It's out of control. And this is the latest number for June. This thing is going to go like this. Let me annotate. It's a great chart. I should tweet this out. The problem is, this is the problem. It's going to be going like this. We can easily pay over $1 trillion in net interest by the end of 2024. By the end of 2024, we will be projected, I believe, we'll be paying over $1 trillion of net interest. That's a problem. That's a problem. In the SEC versus Richard Hart case, I am pro SEC. I'm also pro SEC in the Ripple case, and I'm pro SEC in the Coinbase case. Reggie Middleton's case was a little bit different. I like Reggie. Check date on the chart. What do you mean? Should be a brand new report. All right, yeah, that's a good chart. That's a good report. How much debt, how much US federal debt matures in 2023? The long-term debt maturing in 2023 is almost 12% of the debt. Oh my God. Wow. And the average rate increase from 1.3% to 3.6%, which is fairly large. Wow. Oh, wow. This is okay. Okay, we found it. We found the data. We have found the data. Oh, this is bad. This is fucking bad. Holy shit, we found it. This is from June of this year. Oh boy, oh boy, oh boy. So here's what we got. This is this by maturity? The plot, the fixed rate marketable US debt maturing in each year. I'm gonna actually send this chart to my guys as well. Second. So we plot the fixed rate marketable US debt maturing in each year. The color represents the debt maturity in years. Example, the 1-year debt is blue, contains all notes and bills with maturity of 1 year or less. Right, but is this how much is maturing or is this how much is being held? Oh, it doesn't matter. It's a 1-year thing. Right. So this is 1-year maturity. Look how much debt is going to mature in 2023. But I guess that's normal because it's a 1-year debt. So obviously it's going to mature within a year. Right? But, and what are these numbers? 12, 9. Is this percentage? What's the Y scale? We plot the fixed rate marketable US debt maturing each year. The color represents the debt's maturity in years. Okay. The 1-year debt in blue contains all notes and bills with maturity of 1 year or less. Right, but what's my, can somebody add this up? 18 plus 12 is 30. Say 40, 53 plus 9, 53 plus 9, 42 plus 5, 40. Something's not right. No, something's not right. Hold on. That's 30. That's 40. 54. 53. Sorry. That's 53 plus 5. 58 plus 4. 62. 62 plus 7. 69 plus 30 is 100. Okay, got it. So these numbers represent percentage. So This adds up to 100. So we got 12% of all debt is going to mature this year. And the government is reissuing all this stuff. They're trying to sell a lot of long-term bonds, 30-year plus. They're trying to reissue a lot more long-term debt. So they're gonna. So this was key. Where is that? Right there. The long-term debt maturing in 2023 is almost 12% of the debt. So that's the long-term debt maturing. So that's got to be this stuff right here. Probably starting with the orange. I'm not sure why they're ranking 5% as long-term, but here, orange plus blue plus green plus red is 12%. I'm actually not sure if that's a lot or a little. Next year is worse, I think. No, it's about the same. The chart doesn't seem to add up to me. I have to look at it closer. And the interest rate jumps huge. This is bad. It's a good chart, though. It's a good article. I'm going to read it. I'm going to read it later. It's not long. Isn't inflation the only way out then? No, inflation is not the only way out. The way out is very simple. Unfortunately, it's only crazy Chris Christie that can do it. But he has other batshit crazy ideas. So I'm not on train Chris Christie. No, you just need to balance the goddamn budget and pay and start paying the debt. Like, stop with the wars. Just cut the freaking budget. Inflation is not a solution. People are insane. So Joe wanted me to look at the futures. How's the ticker for the bond futures? 10-year futures. Not sure what the ticker is. Oh, here it is. Oh. I might have jumped the gun. Oh, yeah, that's it. There it is. Yeah, so here's a 10-year bond future, and it's going down because the interest rate's rising. Yeah, you got to stop spending. If you stop spending, you stop borrowing, and then you can start, paying back some of the debt. But the thing is, it's almost too late. You can't solve it now because you ran up your interest rate's too high. You can't pay it back. I mean, RFK is right. Ron Paul could have fixed it. Had Ron Paul been elected in 2012, this could have been fixed. The bond ETF is crashing. Not surprising. 5-year Treasury note future. Yeah, ZN, I looked it up already. Yeah, ZN nearest future. Like I saw N, I thought it was July, but N usually means July. Well, it does mean July on other futures. I mean, yeah, interest rate's going to be rising. Guys, interest rate's going to be rising because no one actually wants to buy American bonds. So if no one wants to buy your bonds, you have to give them a higher interest rate for people to buy your bonds. It's kind of how it works. Yeah, you got to stop the spending. That's the solution. You got to close all these global military bases. You got to get out of, global wars. That will save a lot of money. That will save $1 trillion a year. Easy. It will save the government $1 trillion a year by removing the global policeman. I mean, this is where the UK eventually fell apart. Like you can't maintain, you can't be the global policeman. It's over. It's done for the US. It's over. I mean, they want to start a war in Africa and China. Come on. It's over. Come on. 1 second. My opinion of President Trump's case. Well, I think he's going to prison. That's my opinion. Hopefully he wins from prison and pardons himself and he's still alive. But I think Trump's going to prison. There might be some riots. There might be a real insurrection this time with people not happy. But I really think Trump's going to prison because it's a kangaroo court. It's not a real trial. I mean, he was arrested for something that every single president could have been arrested for. But it only happened to Trump because they can't stand Trump. But I think Trump is going to prison. I don't think it will be a fair trial, but I think he's going to prison. Hey, Tom Crown, thanks for watching. No, he's going to prison. He's going to go to prison. I mean, nothing certain, but they need to get him out. They can't have him be elected again. They have to get him out. And then they'll focus on, not letting RFK win. So first they have to make sure Trump doesn't win. Then they're going to make sure RFK doesn't. Phil, thank you for your super chat. Here's to the unipolar world. Order Japan, USA, much better than Russia and China. Multipolar world order. Russia, China, incapable of force projection. Look, we don't know what the alternate reality is, right? Like it's we don't know if the United States breaks apart. Let's say the United States becomes 5 different countries, and the world is kind of controlled by China and to a smaller extent Russia. Is the world better? We don't know. We don't know. Is China going to install surveillance everywhere? I mean, we don't know. How are they gonna do it? I have no idea. But right now, I think US global domination is bad for the world, and a multipolar world should be better. Do I know for sure? Absolutely not. It could be worse, but I would rather have a multipolar world right now. And like I wish US military would just completely stand down and not get involved in any other foreign country. That's it. Like stand down completely. Close down every military base, get every soldier back on US soil, and start building defensive positions in case, somebody wants to attack. That's it. There would be immediate peace in Ukraine. No one else in Ukraine would get killed. Ukrainians won't be happy about how it ends, but at least no more of them would get killed. No more Russians would get killed. But nobody cares, right? I mean, like the current uh the current position of the US government is to kill as many Russian speakers as possible, and they couldn't give two shits whether they have a Ukrainian uniform or a Russian uniform. That's the current position of the US government. If you speak Russian, you should die. I mean that applies for Ukrainians and Russians because every Ukrainian speaks Russian. If anyone thinks the US government actually cares about a single Ukrainian, they're delusional, completely delusional. All right, somebody wanted me to look at a stock. LSC colon SPX. That's weird. It's a weird stock name. Oh, I'm on futures. All right, London Stock Exchange. This looks bad. Look at that beautiful MRI top on a monthly. It's consolidating, but I don't like it. On a monthly, it looks very bad. On a weekly, it's like neutral. Looks like the hyperwave has ended, didn't it? That's classic hyperwave. That is classic hyperwave. Wow. That's classic. That is hyperwave. That's awesome. Yeah, this thing's going down. Cool. I should post this like in the old hyperwave Telegram channels. Let me see. I think there was actually a hyperwave channel. Bitcoin quarterly. Looks bullish. We don't have a green star though. Let's look at what happened every time we ever got a green star. So the green star shows up when you start breaking the prior candle's high. So this green star led to a huge bull market. This green star led to a huge bull market. This green star led to a huge bull market. This green star, well, it kind of led to a huge bull market because this green star would have occurred in the beginning of the candle. And by the time the candle closed, I mean, the following candle was still a doubling. This candle was up $30,000 for 100%. So even if you did buy at the end of this period, you still doubled your money and the price of Bitcoin went up 30 G's. So every time we've ever had a green star candle, it's gone up a lot. And also it's gone up a lot within the candle itself. So this current candle just started in July. And I hope that the green star candle is next candle and not this candle. Or this at the end of this candle is fine too. But yeah, wait for that green star candle. Interesting. And the red star candles, we had less of them. We had one here, happened at the towards the end. I mean, the MRI top has done a much better job. See, we don't get any MRI buys because Bitcoin has too much bullish bias. So you can use the MRI tops for some critical selling opportunities. And stars that kind of happen. I mean, this star, well, that's a different MRI top. That's why we have a star here than this MRI top. We never got a star here. Interesting. Oh, I know why we never got a star here. Because this was only the second candle of the downtrend. Got a star here, though. I should keep an eye on this more often. Keep an eye on this more often. All right, guys, I'm gonna get going. Apple, Amazon, AMC. Yeah, we can look at those. Oh, I'm still bullish on Apple. Just a bad earnings report. Support right here, and then probably higher. Bullish on Amazon. Looks good. AMC is oh, that was one of those meme stocks. I wouldn't buy this. It's not going to take decades. Okay. You know how when I say that debt matters until it's not? The debt matters until the interest rate goes up, and then it matters. So the debt doesn't matter if the interest rate is below 1%. The moment the interest rate is at 5%, the debt matters, especially when your debt is 100% to GDP. Had the interest rate stayed below 1%, the debt wouldn't matter for decades. But now with the interest rate at 5%, the debt matters immediately. And it's going to matter exponentially more and more every year. So it's not that the debt doesn't matter until it does. It's more of what is the interest rate on said debt. That's what matters. And that's what I've been trying to explain to people. That and the Strategic Petroleum Reserve. Those are the two. Those should be the two most important topics from an economic perspective. Like that's the only thing. It's the U.S. budget, the depletion of the petroleum reserve, and what the hell is the United States doing in Ukraine? Like, those should be the only three topics for the presidential debate. That's it. Nothing else. The only three topics. The biggest issue for the presidential debate should be the what the hell is the U.S. doing in Ukraine? Why is the U.S. there, and what is it looking to accomplish? Should be the number one issue. The number two issue is the ridiculous deficit. All right. Thank you all for watching. And I will see you all on the next one. Spaces tomorrow. Tomorrow, 3 p.m. on the Financial Summit Twitter Spaces. We'll talk about this stuff more. Bye, guys.